Welcome to Balancing Acts, your guide to grow, profit, and scale. I'm Linda Hamilton, a CPA, and for the past 30 years, I've been looking under the hoods of businesses to uncover what really drives profitability and success. This show is different because we know the numbers are important, but the story behind the numbers matter even more. So many things impact your growth and your profitability. It's about striking a balance between them. And to help us do that, today we're going to talk to Alana McNichol. We're going to tackle financial fluency, understanding your tax return. Because if you don't understand your business tax return, you're going to be pretty stuck and have a lot of surprises. Alana, what is, let's tie a relationship for our audience on how a tax return relates to their profit and loss statement.
Yeah, great question. First of all, we're talking taxes. Take a breath. They're not as scary as you think they are. We promise you. It is so important to understand what is on your tax return and how it relates to those financial statements that we were talking about, because they're not always the same, right? The IRS and any other jurisdiction you file in has different regulations that you have to follow. And that determines what you take from your financial statements, what gets thrown into the mix, and what shows up on your tax return, right? So generally, you've got a profit and loss, and the IRS or the state of New Jersey, whatever jurisdiction you happen to be in, might have some things they have to say about what's deductible and what's not, and what's taxable and what's not, right? So it's really important for you to understand that what is showing up on your financial statements is not going to be an exact mirror of what shows up on your tax return. That's the beauty of the tax code. It's thousands of pages that Linda and I love to have for our bedtime reading. But the truth of the matter is that any experienced tax pro that you work with will be able to help you understand those differences and help you think about ways that you can make informed decisions about how those numbers end up, the bottom line, the dollar amount, the check you're cutting to the government.
And that's a great explanation of the fact that sometimes they're different. But one thing you do have to be careful with, and again, I sit on panels often with bankers, and I teach workshops across the country on creating a business plan to grow your business. You want to make sure that your tax return is not showing this big loss and your financial statements are showing a profit, or you didn't intend to show a loss because now you want a loan, and banks don't usually loan money if you're losing money. So you really want to understand the nuances and what you're showing on that report. Sometimes there will be difference because of the states, but other times you want to make sure that there's nothing happening with your return, that they are a reflection and that they agree, both your books and your tax return. So there's a few components of a tax return, Alana, right? There's a balance sheet on it that we talked about in an earlier segment, and there's a profit and loss statement on it. So what about the balance sheet? That one, should that look exactly like your QuickBooks file or whatever you use to track your books?
Yeah, that's an interesting place to start because often I will find a new business owner comes through my doors. I ask them for last year's financials and I ask them for last year's tax return, and they're often pretty out of whack. And sometimes that means that your CPA or your accountant is making adjusting entries in order to get the tax return accurate that maybe aren't flowing through to your books. So that is a quick question for your CPA or whoever's preparing your taxes. Hey, are there any adjusting entries I need to book? So that being said, the balance sheet does go, and in most cases, to the IRS. So you want to make sure that those numbers are accurate, right? You want to make sure that your assets and your liabilities are agreeing to whatever you're submitting to the government. And I think a lot of small business owners sort of get tripped up in loaning themselves money or loaning the company money. That is an area of the balance sheet, and specifically when it comes to income tax, that you really do need to pay attention to. If you loan your company money or you borrow money from the company, the government wants to know about it. They want to know that you, as an owner, as a shareholder, depending on what forms you file, have that financial relationship, right? So you need to make sure that you understand what is required to be reported in terms of financial transactions that you're having as an owner. And on the same note, I will say, as a business owner, sometimes you're putting money into the company, right? Sometimes you're funding operations out of your own pocket. It's very common. And so, what you want to make sure that you're doing with your accountant is that you're either segregating what's business and what's personal, or you're accounting for those transactions in a manner that's consistent with what is required to be reported.
Exactly. And I want to reiterate that point about loans, because one thing that sometimes happens is people borrow money from the bank, from a credit card, from themselves. They put the money in their business and spend it. Let's say you did that in December of 2024. And that tends to create a loss, because it's not, you paid bills with it, but you didn't pay bills out of your sales. You paid it out of this loan. So there's no income. That's creating kind of a loss. And then next year, 2025, you go to pay it back. That creates a profit, because how do you pay it back? Oh, you made some sales and you brought those sales in, and then you gave the money back to, say, to the bank. That creates tax on something that you no longer have the cash to pay with. So I often say, just be careful with these loans. Pay attention to your books. Are there loans there? If you're going to pay them back, make sure you're talking to your accountant, your bookkeeper, about what that will do to your cash flow, because this is about both taxes and the cash flow you need for those. And it's a timing difference, really, there. So in addition to that, there's different forms, right? Our business owners, some of them are sole proprietors or single member LLCs or S corps or partnerships or C corps. Why don't we just say, what are the different tax forms that they should know? They should understand what they file, right? How they file their taxes.
Yeah, and coming back to the third parties, this happens a lot when a business owner comes to me and says, "Hey, my bank wants my tax return." And if you're a sole proprietor, your company is not filing a separate tax return. Your business income is flowing through your personal 1040, right? Versus other kinds of businesses. If you have a partnership with more than one partners, if you have a corporation, an S corporation, they are filing a standalone tax return, right? So if you're a sole prop, it's flowing through on your 1040. There's a schedule on your personal tax return called Schedule C. That's where all your business operations show up. And that is true even if you have an LLC. If you open an LLC, but you're the only owner, you are still considered a pass through, and it's showing up on your 1040, right? And versus if you have an LLC with more than one partner, or you formed a corporation, or you have an S corporation, then there truly is a standalone tax return that is for your business only. So that's a very important distinction, because I think a lot of taxpayers expect a separate business tax return, but often it's actually just part of their 1040.
So now we're speaking in January, but this could be any year. You're filing your taxes for last year. So this is a great time, as you get your numbers together, make sure your books are accurate. And any questions you have, if you listen to all the segments we did on cash flow and profit and loss, make a list of questions for your accountant, so you can get a better understanding of how your business is doing and what impact taxes have on them. It can be a roadmap that, how can I minimize taxes, but balancing wanting to have a profit too, because you're trying to grow, right? You want to be able to have enough money there to fund your growth. So you should know what kind of tax return you file. I often ask that question, and the business owners don't know what they file. You want to know. Ask your accountant when you go in to see them now, what type of tax return, what's the form number I file, and can you walk me through it so I understand it? Alana, I know that you don't just deliver a tax return and never have a conversation. You, I think, have an important conversation to help them understand it after the fact, don't you?
Absolutely, yeah. I mean, you are signing that tax return and you are attesting that what is on it is complete, true, accurate. Um, so it's not something that you want to just slap your signature on, right? I mean, you really do need to understand those numbers. Hey, this is what we're telling the government is taxable. Hey, this is what we're telling the government is deductible, right? Those numbers are real. They matter. Unfortunately or fortunately, depending on your perspective, the IRS has a bigger budget and they are auditing with more frequency. And so you really do want to talk to your accountant. Yeah, what are those numbers? And also, what is my responsibility, right? As a taxpayer, what do I need to do to make sure that I can substantiate these expenses, that I'm audit proof? These are the conversations that you need to have and you need to understand because we see it. We do see it that the records that you're keeping have got to fall under what the government tells you they need to do, right? Otherwise, you're going to have a different conversation.
Right. And so thank you for being with us. You can find our CPA firm, lahcpas.com. Alana, what's your LinkedIn profile?
Yes, you can find me under Alana McNichol CPA. You can also shoot me an email, amcnichol@lahcpas.com. Throw balancing acts in the subject line, so I'm sure to see it, and I'd love to have a conversation with you.
Thank you. And I hope what you understand from this is understanding your tax return. It's still the past. It's what happened last year. We cannot change what happened last year. What we want to do is be able to impact the future. Where are you going and how do we make positive changes so you can grow more profitably and resiliently? I'm glad you stayed with us. Come back next week for another episode of Balancing Acts to Grow, Profit, and Scale.